the market's broke, fine. We've seen that before, flash crashes and stuff. But the market makers couldn't access the APIs. So who bought the stuff that was being liquidated? And my guess is the exchanges had to step in. Binance, OKX, and whoever had all of that forced deleveraging. And they had to step in because there was no market at all. And everything was automatically being liquidated. Can you imagine that happening? You're sitting in front of your screen, the market makers are shut out from making prices, yet everybody's being liquidated in a cascade. What do you do? Well, if you're Binance or whoever, you're going to have to put your balance sheet on the line.
Yeah.
And my guess is that's what happened. So they bought a whole bunch of stuff, and then somebody's been acting like a program trading desk, unwinding a big trade. We've kind of seen it every day. They sell something, they sell a bunch, and that's what it looked like to me. So somebody took on an absurd amount of risk because they had to, and they've been having to work out of it in an illiquid market over time.
Good morning, everybody. Hello, and welcome back to another episode of your favorite crypto news related channel. And no, you're not dreaming. Johnny Krypto woke up this morning to join us for today's show, and I couldn't be more excited for my man. We're obviously throwing shots jokingly. Johnny's up and working every day, but today's going to be a really exciting episode for our listeners. We're going to break down a lot of very interesting conversations, starting off with the fact that the Supreme Court did not rule on the Trump tariffs. They're kicking the can down the road, and we're going to break that down because that could be another good sign for the crypto market. We're also going to be discussing the Clarity Act. Now, for all you guys who watched our Tuesday night update from yesterday, we did a great discussion about how the Clarity Act will open up the floodgates for speculation, right? And this is the moment that we have been waiting for when it comes to the 3-year speculative bull market that Johnny Krypto has been talking about since probably 2023. I want our listeners to also understand one more topic. We are going to be breaking down passive income coming to ITrust. We're going to talk about this when the CEO joins us later on in the episode, and we will have Kevin Maloney, the CEO of ITrust, joining us later on in this episode. So be sure, if you're an ITrust user, throw your thoughts, throw your comments in chat. We're going to incorporate them all throughout today's episode. But Johnny, before we dive into any of that information, people are interested in the exciting price action that we're getting in the market today. Now, I put out an update yesterday. XRP was trading back above $2.10. I put out an update on Twitter, and people said, stop celebrating $2 XRP abs. And my response was, it ain't a celebration. I'm just pointing out the reality. The reality is, it appears like we got our bottom in late December, and we're trending back up and in the right direction. We're going to play a technical analysis video, Johnny, after your introduction here. But first of all, how are you feeling this morning? And thank you for being here.
I'm feeling great as always. And good morning to all the crypto maniacs out there. Love and appreciate every single one of you, whether you love us or hate us. It is funny, Abs. I do see people all the time say, oh, why are you guys always talking about this price and that price? Listen, at the end of the day, we're just reporting, right? We're kind of like reporters. We're sharing with you guys what's going on in the market. Are we excited about $2? No, we're not. Yes, I did do my push-ups. I saw the answer in the question in the comment. But so the reality is, look, guys, we get it. We know that this is a long run. We're here for the long haul. We're looking at the big picture. We're going along this journey together with you guys. But guys, like at the end of the day, yeah, does 15 cents get me excited? Do I care if we're at 260? No. And we all want the bigger numbers, but you have to understand something. You still want to see the price forming a base, Abs. You want to see kind of like, where is there a good floor? Where is this thing kind of going to hold up? And as you heard Raoul Paul just talking about the start of the show, somebody's got to be buying. Somebody was buying the dip back then when the markets are crashing. We need market makers. Well, we also want to see, are there big institutions? Is there smart money coming in and holding the price up at $2? If so, that tells you something. That tells you that there's intrinsic value there. We are in a speculative market, my friend. So speculative markets, what that means, guys, is price could drop at any time. Because it's speculative, meaning, there's no real value there. So people are just holding on for hope. But when you see something that holds on to a consistent $2 price, Abs, for God, almost a year now, that's in a speculative type market, that makes me feel good to know, like, okay, we got a strong base. There is smart money that thinks this thing is worth that number. And that's where I think, why you're putting the number up there. So let people see that. Hey, we tested this number. That is significant. It's not about, oh, we're up 16 cents. No, it's about, hey, there's a floor here that's pretty solid. And when we're ready to go up, Abs, we're going to kind of launch now from this level up. And to me, that's all that I think is the main message there from that perspective.
You make a really good point, Johnny, and I want to actually add to it before we dive into the articles for today. Guys, we're already at 1,500 live listeners, over 1,000 watching on YouTube. If you're showing up for the passive income analysis, you're going to get that later on in the episode. I just want to remind people once again, the CEO of ITrust, Kevin Maloney, will be joining us in just a couple of minutes. So be sure to stick around, ask your questions in chat. But Johnny, something that I've really come to understand over the last month or two is what you've been explaining to me for the better half of 2 years, which is a speculative market is where people get rich.
Mm-hmm.
That's the mic drop kind of statement that I've really come to realize. And the reason for that is this. When the Clarity Act is passed in 2026, what does that let people know? It lets people know that the digital asset class is here to stay. So now the biggest speculative traders in the market say, this is an emerging market. It's going to be here for several years. Which of these blockchains is going to be most profitable? And that's where we see big money start placing their bets in the beginning of the speculative cycle, just after the Clarity Act is passed. And even more importantly, and this is fairly obvious for people out there, if the Clarity Act is going to be passed, the big boys, they know way before we do. We're going to see these prices start to increase 6 weeks, 8 weeks in advance. And it really starts in January here, 2026, where the bull market could get kicked off. And all those bears, all those people waiting for lower prices, Johnny, they're going to get left in the dust. I've shared this time and time again. It's very easy to be a bear when prices are going down. Here's where it's tough to be a bear. When you're sitting on the sidelines and prices are going up, that's why I feel I have an obligation here to share with our listeners the long-term perspective that we've been very transparent about. This is an emerging market focused on liquidity. And for the time being, the liquidity cycle has been extended, my friends. So if you're excited, you're enjoying today's episode, smash that like button. We're about to dive into this content. And guess what? Our special guest has arrived. CEO of ITrust, Kevin Maloney. Thank you so much for making an appearance on Good Evening Crypto. Now, we do have some phenomenal topics that we're going to get into for today's show, but I wanted to just start off by saying thank you for being here. How you feeling? And what's your outlook on the market today? A lot of bears out there. You're not going to find that on our channel.
Hey guys, can you hear me okay?
We got
Audio is great.
Great. Yeah, thanks for having me. No, I think it's exciting times. We're looking for a little bit of clarity from the Clarity Act. We're seeing a little bit of movement in the amendments that we all read about and heard about yesterday. I think that there's a lot of FOMO and people sitting on the sidelines, and there's been some interesting activity, no doubt. You guys have a great show, and I'm happy to be a part of it.
To have you here for today's episode. And I know Johnny has some questions, but the thing I wanted to kick it off with was the Clarity Act, because this could be the catalyst that brings major speculation into the crypto space. And I know a lot of listeners out there, they're focused on utility. But as we study emerging markets, we looked at the tech bubble from the late 90s after the Telecom Act was passed, and it was 3 years of speculation that made those investors wealthy. We're anticipating something similar with the passing of the Clarity Act here in 2026 that could lead to 18 months, 2 years of speculation. And as you know, because I've watched some of the other interviews, the 4-year cycle looks like it's dead. It's in the past. It's in the history books, and it may not be impacting the market going forward. So I did just want to kind of hear broadly, do you think the Clarity Act is going to change the way that people speculate on crypto assets going forward?
I don't know if it's going to change the way people are speculating. I think it will change the way banks, large TradFi institutions are engaging, and they're looking for a little bit of rules of the road in their defense. I don't blame them. It seems like a little bit of a land grab from the banks lately, asking for a little bit more control. I understand their position. One of the big contentious points potentially is the ability to pay out rewards, yield, or returns on stablecoins. And as you all know, banks make a lot of their money sitting on trillions of dollars in deposits, which they loan out, and they make the delta between what they pay on, a savings rate or money market rate or the loan rate. And so obviously we need big banks to be around. We need them to be adopters, but we need them to be innovators also. In my opinion, this is just my opinion, that if you don't innovate, you better adopt or you die. And so I think it's encouraging that the banks are engaged. I hope that it's not a stopping point for crypto. I don't think it is. I think they are trying to protect a lot of their space, and I understand where they're coming from. But I think we'll figure it out. Obviously, Coinbase, Brian Armstrong are pretty vocal about what's right for all of us, the masses, to benefit from. And we're engaged in talking to large banks on a daily, weekly, monthly basis. Some of them are big partners. And they're trying to figure out what role do they play in this arena going forward. So I'm looking forward, some clarity in the Clarity Act, but I hope it's not too obtrusive or intrusive into what we all are expecting.
And the stablecoin yield is really important, Johnny, because I was doing a little bit of research this morning. $25 billion is how much JP Morgan alone was able to generate on that yield, or the delta that Kevin had mentioned. So it's really important, and the numbers speak for themselves. But I want to give you a chance to kind of chime in. And obviously, thank you for being here.
Well, first of all, let me say thank you, Kevin. Welcome to the show. And I couldn't agree with you more. I mean, the reality is when I kind of step back and look at the big picture of everything here, we basically have a big battle with the banks having some of their income threatened. Let's just call it what it is, right? At the end of the day, there is an opportunity for you and I as consumers to go anywhere we want and stake our coins and earn 5, 6, 10, 12%. You don't get those kind of yields at a bank, right? And how do banks get their money? Like you said, they offer a yield, you give them money, and then they go loan out 10x, 10x the time because of fractional lending, and they make massive. And that's all at threat. And so to me, I kind of look at it as there has to be a happy medium somewhere in the middle. I would imagine the Clarity Act is, and that's why I think banks are pushing back going, hey, we can't give out those yields. And you're right. That is, to me, the biggest crux of the problem is they're going to need to figure out, banks are trying to figure out right now, how do we play in this space? And I imagine they'll come up with some kind of solution, because if other entities can offer 5, 6, 10, 12%, banks will be able to figure out how to do it as well. And to me, until we get that figured out, I'm wondering if that's why we keep hearing the Clarity Act keep getting pushed out. And I'm wondering what you're hearing. I know maybe you've got some connections out there. I don't know, but I'm wondering, are you hearing in the background, is the Clarity Act going to pass? Are they figuring out a solution with the banks? What do you think?
Yeah, with high certainty, some of the congressional people we've met with have confidence that it'll likely pass this quarter. Will we love all of the amendments, additions, subtractions? No, you just can't please everybody. We need big banks to play ball in the arena. They're going to be a big part of this adoption and distribution story over the coming years. They know that they need to innovate and adopt somewhat, but they also don't want to give up everything. It's been kind of a scary thing for them to watch how quickly crypto and the blockchain economy has infiltrated their 100-year-old businesses. And so they're trying to figure out, how do we create shareholder value, keep assets, deposits, customers engaged, and drive revenue and ultimately profits, right? That's what we're all here for. We're all, definitely, we're a for-profit business, and we have to create shareholder value. So there's a place for them to compete. The bank lobby, don't underestimate, is very strong. They have a massive influence, left or right, red or blue. I always say it's kind of a red, white, or blue issue. And so they need to get it right, but they also need to make sure that their businesses are sound and protected going forward. That being said, we're not going to love it all, right? It is 278 pages. There have been multiple amendments over the last few days. Some people are asking for more time. Some have been denied. But I do think, for example, feedback from Congressman Brian Stile, who was here just a few weeks ago for lunch. We hosted him at our offices here. There's some high degree of confidence that something will get through that will at least give us more of a roadmap that we can build, grow, and adopt from. Again, we're not going to love all of it. But for me, we're not trying to do anything bad. We're not trying to skirt the rules. We're not trying to go completely anonymous, off the grid, in a black hole. We're saying, hey, it is what it is. I ultimately can't control that. We need it to be attractive enough for all of us to build business around and serve our clients, give them the transparency, the trust, the compliance, and the fees that they feel comfortable with. But again, I think the bank distribution part of it, adoption and distribution, is going to be a big part of the story. If we want to see prices go up, we need more institutional buying and adoption. And that's something that we all have to get comfortable with. That being said, I hope that the crypto economy, the crypto the crypto arena, the voices for all of us are going to stand their ground on some of these issues.
Yeah, you said something important, and I always expect that. At the end of the day, when Congress comes to a decision on the law, it usually, if neither side is happy, that's usually the best for us, right? You never get a bill where one side is happy and the other side isn't. Usually it's a negotiation, and I expect that to be the case. My question to you is this thing on this topic. For me, I've been a big advocate of saying that we're going to get money in. These are liquidity markets. That's just how markets work, right? We need more money to come in. But my thinking is, as we get the Clarity Act passed and we get those rules, and there are big players on the sidelines that can come into this space that maybe have money sitting there that aren't ready to put it in because they don't want to, banks and institutions don't want to take on big risk. Is there any truth to that? Do you think there is money on the sidelines waiting to come into this space once this Clarity Act is passed? Or do you think all the money that's going to come into this space is already here?
I'm very confident there's trillions sitting on the sidelines. I mean, trillions. That's capital T. That's a lot of dollars. But listen, registered investment advisors control and manage about $100 trillion. IRAs alone in the U.S. with 55 million IRA accounts, 13 to 15 trillion, depending on the stats. There's another 8 trillion in U.S. 401ks. There's trillions in deposits at banks that are sitting idle in money market and savings accounts. So there are trillions on the sidelines. I'm not saying all of those trillions will participate in the blockchain economy, but a small fraction. For example, if registered investment advisors, banks, broker dealers, and or the U.S. government start recommending a small allocation, for example, a 3 to 5% allocation into crypto, even if it's just the top 5 or 10 coins alone, that moves the needle immensely to the tune of trillions. And if crypto right now in aggregate, what is it? 2.7, 2.5, 3 trillion in aggregate, all of it combined is only 3 trillion. Above ground gold is worth 20 something trillion, right? And we should be at that or above in aggregate at some point. So I think there's going to be a lot more activity. There's a ton of money on the sidelines. I'm not saying everyone's going to participate. We've seen a lot of panic selling and FOMO buying, but I do think at some point it'll be the narrative's going to be something like, again, choose the dollar amount that's best for you and your long-term investment approach. But that 3 to 10% range is going to come to fruition for most working professionals. Not the early adopters that are fanatical, maxing out credit cards to make an extra buck on Moodang or Peanut meme coins, but like, people that are looking for long-term, a little bit of extra, because none of us have enough to retire, right? We're all looking for a little bit of boost here and there. And so those are my thoughts. A lot on the sidelines. I think a lot more will participate. The Clarity Act, again, we're not all going to love every component of it, but it is going to give some guidance to the broker dealers, the registered investment advisors, and some comfort for the banks on their role, their participation level. They're going to figure out how to make fees on it, how to promote it, or educate people around it. We're a self-directed platform. So as you guys know, we don't have a sales team. We don't recommend anything. We facilitate access, and we hopefully serve with excellence consistently. And we do it in a secure, closed loop system. That's my plug. But we let people decide what they think is good for them. And we always say, look, do your own due diligence, measure 5 times, cut once. But it's going to happen. There's some big things. Yeah, I think the train's left the station. Big things are happening, and we're going to see who gets on board here over the next 90 to 120 days.
Well, Kevin, one of the things that we always talk about on this channel is avoiding the simple mistakes. It's not how much money you make during a bull market. It's how much money you keep during a bull market. And that's why we love the ITrust platform. The number one thing that we love to talk about, we reference the PCA accounts, which is phenomenal, but the Roth IRA, I think our community, there's tons of people in our community right now over the age of 55 who I believe should be taking advantage of this product. And we've been very outspoken about this, but there's nobody to address this better than you. When you look at Q1 2026, I know you guys have a lot of phenomenal things planned, and I'd love to get into that for this portion of today's episode. I also got to say, I'm a man of my word. Today is my Aunt Ashley's birthday, guys, and she's out there. If you could, wish Ashley a happy birthday in chat. And I apologize, Kevin, but we say family first on this channel. That's like how we like to do it. So shout out to Aunt Ashley. And the happiest of birthdays, your best years are in front of you. But in regards to ITrust for Q1 2026, there's one thing that everybody keeps asking us. It's about the yield, and we're going to get into that, guys. We're going to talk about it later on in today's show. But Kevin, when you look at what you have planned for this quarter, what do you think our listeners should be aware
of? Well, first of all and foremost, happy birthday, Ashley. That's a real important milestone. So that's great. We're happy to be part of that celebration. Secondly, I love what Johnny Krypto was saying. this negotiation with the crypto arena and the banks, it's going to feel like a lawsuit settlement. And a good settlement, in my opinion, and I've had experience across the board, unfortunately, a good lawsuit settlement is where both sides feel slightly screwed, right? And so don't expect amazing things, just expect some clarity and bigger potential institutional participation. They need the roadmap and guidance from the regulators for them to have the cover to avoid risking brand or risk, or reputational risk when they participate. As far as ITrust Capital goes, we have some exciting things happening. I mean, literally this week we were launching a reward option for stable coins, but we're holding off for the clarity that we hope is coming from the Clarity Act. We don't want to offer rewards on some stable coins and then have those get taken away, because there's some talk about how none of that should be paid out. We do think that some of it will be paid out in the form of memberships, activity, rewards for activity, rewards for being a member of the website, things like that. So stable coins is going to happen in some form or fashion on our website. We're ready to go now. We're just waiting to see if anything passes in the very near term. BTC yield is happening. That's public information. We put out a press release with Coinbase Asset Management Group out of New York, professionally managed. Excited about that. We're in the legal sort of framework phase. So behind the scenes, there's a lot of paperwork and entities that need to be set up. We also just got, we're about to be approved, or we just got approved on Friday. I'll have to confirm for our registered investment advisor status. We filed a Form ADV with the SEC, which allows us to be a sub-advisor or advisor on some funds. And so we have a vision to launch some funds that'll generate yield on multiple different types of products. So we're really excited about that framework. As you guys know, we're a registered, state chartered bank regulated trust company. That being said, even though we can touch the client cash in crypto, we don't. We use large third-party institutional storage providers and U.S. custodians, banks, and other trust companies that do this on a daily basis. So we hold them accountable. We're always the administrator or agent for those custodians. We could do more of that on our own, but we help them do a really good job behind the scenes. We are going to be looking and launching a lending product, which I think will resonate with quite a few listeners. Based on feedback, we do, feedback. We have some really great tools that analyze our phone calls. Everything's recorded. Everything we do is recorded. So we have some great AI tools that analyze phone calls, and we look on a weekly, monthly basis on what people are suggesting or asking or desiring. And lending product was literally at the top of the list. Next on that list was yield, which we can talk more about. So we hear you. We love the feedback. And we are trying to iterate and innovate based on that feedback. I mean, we've got to create, then we've got to validate, then we've got to educate, and then we need to work together to accelerate. That's part of our relationships with the influencers. On the second half of this year, RWA funds is something that is super interesting. Real world assets, that's more obviously in the security arena. So we need to work closely with some brokers that are licensed to offer those. It's not something we can sell because we're not licensed to do that, but we think that there's a lot of potential with tokenized assets, whether it's traditional securities or alternatives like real estate. But that is coming, and that's something we want to make available to and the sort of the fifth, sixth part of our strategy is build out some tools and dashboard access for registered investment advisors, the RIAs out there that are really managing trillions of dollars for high net worth individuals and families out there. Give them access. Again, the RWA stuff, the RIA stuff, excuse me, is second half of this year type of things, because we need a little bit more of that regulatory clarity to make these offerings. And then this quarter also, business treasury accounts are getting launched. So if you have an LLC and you have a partner, or it's a sole proprietor LLC, you can set up an account with your EIN number and buy and hold, Bitcoin, Ethereum, Solana, et cetera, in your business treasury account. with a U.S. custodian with large battle-tested, proven institutional storage provider. So really safe ecosystem. Again, all in that closed-loop ecosystem, which means for anybody new to ITrust Capital, that none of our digital asset wallets are connected to external wallets. You can't get into my ITrust account. I could get lazy at Starbucks and leave my laptop open, I always say. You can log in and see my small crypto positions. You can buy and sell, but you can't leave with my cash or crypto and send it to an external wallet, whether it's your friend in Belarus or London. It can't be sent out externally. And that's by design. It's a feature. It's not a bug. And so every exit is with our involvement. There's multiple security steps to validate identity and then answer security questions, micro test, etc. So we're pretty excited. So we talked about stable coins, BTC Yield, RIA, an RIA platform, which is ties into some of the the ability for registered investment advisors to get into crypto on behalf of their clients. Lending product was the top of the list. Yield is just right after. RWA funds, RWA opportunities, second half of the year, looking for more clarity on that. We can't do it, but we're gonna work with some people that are offering some tokenized assets. Again, we're looking for middle of the fairway type of things. We don't have to be the first or sexiest, slickest company out there. We need to be the boring, lean, efficient, profitable company because we're dealing with billions of U.S. working professional retirement, capital. So that's important to us. And the treasury accounts. We think that the treasury accounts and youth accounts, setting up youth accounts will resonate because our clients are asking for that.
It's interesting, Kevin, as I hear you talk, it's so funny. You can kind of see that. You can see how the Clarity Act is impacting your business, right? You're sitting there going, we want to do this, but we got to wait for that. And I can't imagine how many other companies are exactly in the same boat with you, right? And that's what has me excited, because I feel like there is a ton of innovation and money that's going to come into this space that can't get here yet. But yet a lot of people, because they've been here for 1, 2, 3, 5 years, they're getting frustrated that they're not seeing prices move a lot, right? And you could, so guys, if you're here, listen to Kevin. He's literally telling you it's on the cusp of good things happening. But I love one of the things that I know we're going to get asked. We get asked all the time is, when is XRP yield coming? And I know you're working on it, so I don't know what you can and can't say. But if there's anything you could talk about, our audience is like, we have a very, very big XRP audience. They want to earn on that. And I know you guys are working on it. Is there anything you could tell us about that? Are we looking at maybe Q1, Q2? Is it even going to happen? Just curious of whatever you can tell us. And if you can't, that's fine too, but we'd love to.
Yeah. Thank you. I saw your banner this morning and it said massive update, XRP passive yield coming. And I thought, oh my gosh, what did I get myself into? I've said it before and I'm very consistent about this. I mean, we have calls weekly. We got off a call this week on an opportunity. We've looked at more than a dozen opportunities. I'm not saying there are no real opportunities out there. We all know there's no native opportunities at this time to drive passive yield in XRP. Unfortunately, there are myriad of opportunities out there. We haven't found one yet with the transparency that we need to see. I don't need to see the proprietary approach to how people are delivering this value, but we need to know a little bit more about how the sausage is made, because even though we're not managing that piece of the action, that piece of the puzzle, it is a puzzle. We have to get it right. And we can't offer things that we don't understand, right? So I'm either, and we have a very smart group of people here analyzing multiple opportunities. There are several. I would say if you found one that is resonating with you or you're considering, that's amazing. Just, measure 5 times, cut once, do your own due diligence, and make sure you get the transparency you need to move forward. And obviously don't bet the farm, right? Because, it is a bit risky. And if people can't explain exactly how it's done, I would say, that's a red flag. There are, I think, a few really decent opportunities. And we're evaluating those. I'm hoping that we come up with a strategy that we can verbalize more like later this quarter. But we aren't launching anything in the next week or two that's going to drive passive XRP yield. I hope that's not your massive update, because I know that's not what some people want to hear. And again, I mean, we're looking. We need to be really careful on what we offer on the platform. Even though we're not selling or recommending anything, we still feel responsible for the things that are made available.
You know what, Kevin, I'm not going to lie. I'm actually happy to hear you say that, because I don't think people understand how this works, right? When people are like, oh, I'm going to put my XRP, I'm going to earn income. It's like, well, wait a minute, folks. It just doesn't earn magic. It doesn't earn magic. There has to be a reason of how you earn that income, right? And I get it that you guys want to make sure that, because basically, in a nutshell, and correct me if I'm wrong, you're just taking the money like in investing, right? And you're investing it somewhere else to earn a higher yield and then give some of it back to the consumer, right? And if that's the case, obviously we want to know that you guys are doing it in an asset or doing it in a way where you're not going to lose it, and it's safe, and it's by the books, right? So I really, really appreciate that you guys are taking your time and doing your due diligence to get it right. The other thing I appreciate, and boy, do I wish it around 2 years ago, I got to talk about it, is your PCA account, the premium custody account. And then you kind of touched on a little bit. And I want to just kind of say why I love this product. Is the end of the day, I was a victim. Right? I had half of my crypto stolen. It was taken. My Atomic wallet was hacked. Lost half my crypto. Thank God I had it split in different areas. But point being is, boy, do I wish the premium ITrust custody accounts were around back then. Because worst case scenario, due to your closed loop system, the hackers, if they hadn't even gotten in, from what I understand, and correct me if I'm wrong, the only thing they could have done was withdrawn my money back to my bank account.
Even that's really difficult, right? So let's wrap up the XRP thing. The higher the reward someone promises you or you're getting, the more risk is being taken, right? So if you're comfortable with the risk and you understand the approach they're taking, that might work for you. We're still trying to get comfortable with the strategies that are available, and then do the due diligence on the approach and understand the underlying, what is driving the underlying returns. Some people are selling the position and then investing that elsewhere and buying options on puts or calls, so that you have protection on the up and down side. And some people are doing other things. So that's the XRP piece. Excuse me. on the PCA account, the premium custody account, our vision there was really, we had been serving nearly 100,000 retirement working professionals saving for their retirement across the U.S. And many of our surveys came back as, we love your service. We love the dashboard. It's improved immensely over the last year. Go check it out. We're always looking for feedback. What other bells and whistles can we add? What else can we do? We love that you answer the phone in the U.S. And service us well here with a lot of transparency. When are you going to launch non-retirement accounts? And our goal is not to compete with the big exchanges. As you guys know, we're not an exchange. We're not a payments platform. We're just a highly secure custody platform. And so we launched the PCA premium custody accounts for non-retirement assets last year. And a lot of dollars flowed in from around the world, all US, but around, from different exchanges. And why did they do that? Again, because it's a very secure closed loop system, and we've got the custody and the service. I think the service component is key, because we don't just throw AI bots at it. Labor is expensive, and good labor in Irvine, California is expensive, but we have amazing people. They're worth every dime. And we know that the 40 to 60-year-old working professional really appreciates that they have, the cell phones of some of our, key people in their phone. And we get thanked for that often at conferences that we attend across the country. So if in the event that, you do leave your laptop open at Starbucks and somebody sits down, they can sell your Bitcoin or Ethereum, but it stays inside the vault. It'd be like someone robbing a bank. They can get into the vault and they can run around with the cash inside the vault. You just can't leave with it. You can just move it from this shelf to this shelf. It's in a cage in a 3-foot thick wall, and you can bounce around the walls. That's amazing, but you can't leave the vault or the bank with cash or crypto. And that's a really important component. Johnny, just like you, I was hacked a few years ago, SIM card swap hacked through a large network, cell phone network provider. And I couldn't believe it. Somebody made a phone call, offered somebody a small amount of money, and my SIM card was swapped to a lesser phone in a different region of the US. And it took them 10 minutes over the phone to do that, but it took me 2 days to recover my emails, a couple of bank accounts, and crypto. And so that was a wake-up call for me. I was lazy. I wasn't using two-factor authentication, or I was just using SMS. And all someone has to do is say, forgot password, and they get a text to the new cell phone that they're holding, and you have no idea. And I have beautiful long passwords. They're incredible. They're this long, right? But it doesn't matter if someone gets my cell phone and said, forgot password, reset to SMS, a text message on my phone. Obviously, that's all been turned off. And so hopefully my wife doesn't leave me anytime soon, because I use her information, my kids' information, and other emails for lots of access points. So be careful. It is a problem. We want to make sure that we have custody for dummies. And that's literally speaking to guys like me. I've been hacked, and I don't want to wake up and wonder if my exchange balances are still going to be there, because someone could accidentally come across or absolutely target you, get into your account, compromise, and drain the assets. In our PCA accounts and our IRA accounts, there is no connectivity to external wallets. Without our involvement, you cannot send externally to wallets, which is really key. So a lot of people thank us for that. It's a little bit of friction. But again, if you're thinking long-term, like a savings account, and and you can buy and sell and trade, a lot of activity all day long. Most of our clients do. But if you're thinking long-term and you're not trying to pay people and settle up every day, that's what exchanges are great for. Krypto.com, Binance, Kraken, Coinbase, and others do a great job of letting you make small payments to the masses back and forth with quick settlement. This is not what our accounts are set up for. And so it's a little bit harder to leave, not because we don't want you to leave and trying to make it difficult to keep your assets. We want to make sure that other people can't leave easily if you get lazy or they compromise your account.
Well, Kevin, I think it's really important for our listeners to understand this as well. There's two major mistakes people make. One, they lose their crypto. There's security concerns. There's an atomic wallet hack like Johnny Krypto had referenced. That's where your product comes in and really gives them a layer of protection that you're not going to find in a lot of other companies in the space. The second thing I think is so important is the rolling over of the Roth IRA. Now, this is something I didn't even know about until we partnered with you guys. I think it was in September. I know Johnny has been a longtime partner, dating all the way back until 2022, I think. But what really stuck out to me is that you pay the taxes up front, and then all that growth compounds tax-free. That's my perception of that. And I think our listeners, a lot of people out there still haven't really fully understood what that means. So let me just throw this out there, because I was watching another interview, I think it was from 2 years ago. And in the interview, you actually referenced, you guys have over 1.5 billion units of XRP, right? Or something along those lines. Huge number. So obviously you're anticipating that's going to increase in price as this market grows. And our listeners should take the same precautions here, where it's like, if we're looking at an asset that's $2.15, and we all believe it's going to be a higher value, arbitrary number here, let's say $5 to $10, well, then there's ways to protect ourselves. There's ways to increase the amount of money that we keep when it's all said and done. And that's why I love the ITrust product. But if you could you explain that just for people who don't understand? When you roll over the Roth, how does that process work? And why should our listeners be using that to their advantage?
Yeah, I mean, the Roth is after-tax dollars. So you pay taxes on dollars, and you can put a certain amount in. I'm 53, so I can only put a certain amount in on an annual basis. So you're kind of limited on the max contribution annually based on your age. But Roth is after tax dollars. You can roll over from other entities. There are other large, you may have an IRA, a Roth or SEP or traditional IRA at Schwab, Fidelity, Vanguard, you name it, big, well-known names out there, and you can roll over all or part of it to get into the blockchain arena and participate in this economy. We have about 86 tokens, and assets that you can participate in. The big banks, I have to hand it to them, they're offering something which is great. Some of them don't offer crypto IRAs yet, and some of them are only offering Bitcoin and Ethereum as far as spot, direct spot ownership, Bitcoin, Ethereum, Litecoin, maybe others are thinking about Solana. What we found is, 90% of our clients want more than the top 5 tokens. And so we're never going to have thousands, because, we just can't, get comfortable with that many assets doing potentially well over the long term, but we've got about 86 to choose from. So you can roll over all or part of your traditional IRA and or your Roth, which is already, you'd already pay taxes on those dollars, and then it comes out tax-free at the end. On the traditional, you would take, required minimum distributions out at 59.5 at the tax rate, which is hopefully lower than when you are right now at 59.5. And so either way, there's tax benefits. You can buy, sell, and on your own and internally in those ecosystems with a lot of great tax advantages, and hold it for the long term. We thought most of our clients were going to buy it, set it, and forget it. Buy Bitcoin, Ethereum, Solana, XRP, and hold on to it for several years until they hit that sort of the ripe age of where they can start pulling out the tax advantages. And we thought they would check it once or twice a year. We got that very wrong. There are tens of thousands of our clients that are in our app and platform every single day, buying, selling, and trading. And that's why we dropped our monthly fee. So that we dropped the monthly fee, we lowered our minimum, and our account volume went up 4x, and our account balances actually went up as well. And so there's a lot more engagement from the working professionals. So again, I wouldn't bet the farm, put all eggs in one digital asset basket, and don't put it all into digital assets. But if you're gonna allocate in this space and you want the long-term tax advantages of the individual retirement accounts, it's a wonderful opportunity to do that.
Absolutely. And I want to be respectful of your time, Kevin. So I just want to say massive thank you again for you joining the show this morning. We really appreciate it. And we are going to be out in San Diego. We told our listeners we'll be live from San Diego this Friday. So I'm really excited about that. But Johnny, wanted to give you a chance to kind of ask a last comment, and then we'll let Kevin go.
Yeah, Kevin, thank you for your time. There were a couple questions in the chat, just two. I was hoping maybe you can just real quickly, we can answer these just to help our audience there. One was, can they move an annuity to an ITrust capital account? Is that possible?
Let me check on that. I need to understand. I'm not sure about that. Let me get on with Jared and our team and find out. We'll get back to you on that one.
And this guy says, I registered to an ITrust, downloaded the app, but for some reason they're calling me. Is this a scam? I believe you guys do follow up and call, correct?
Yeah, we do call a lot of people. So, that should not be a scam. If you sign up, we put a voice on the phone right away, and they should be able to identify themselves and walk you through. But don't share any passwords. Don't share any personal information over that call. And yeah, guys, thank you so much. And by the way, I'll get back to you on the annuity thing. And any other questions that come up, just send me, top 5 or 6 questions, and I'll get back to you quickly. If you're in Orange County this Friday, hopefully we can see you guys. Stop by the office. We'd love to see you guys and host you. We've got 105 people here in Irvine, just 2 blocks from John Wayne Airport in Southern California. So come by if you can. And thank you so much for your time. Appreciate it. Looking forward to more updates with you guys. And it's been a great partnership. We're out there just trying to, kind of communicate and connect and figure out how to grow and learn together and deliver some value. So any feedback you guys have, your audience has on things we can do to improve our process, improve the product offering or services. Yeah, Kevin, lower the 1,000.
There's one right there, Kevin. Yes, our audience.
Yeah, we did. It was 2,500. That's a good question. We did lower it to 1,000. Give us a call. We'll see we'll see what we can do there. We don't make any money until a certain level of thousands. So they're kind of loss leaders. But if it means we can serve a client and they're going to grow professionally over time and add to that, then maybe there's a relationship we can start there. So,
well, I can tell you this, Kevin, I love your product. I'm excited about it. And the fact that we talked about there's trillions of dollars coming into this space, which means we're going to make a lot of money. And having a Roth IRA means we don't have to pay any of it to taxes to the government. To me, gets me excited. So thank you for your Roth IRA trust, being able to invest in. I got in you guys in 2021 because it didn't exist. You could not invest your 401k retirement programs in crypto. So I was very, very excited about you guys, and it's so great to see you guys grow. And we are looking forward to seeing you guys this week. So,
well, thanks for the feedback. We're not perfect. We're always looking to grow. Self-directed 401ks are an interesting space. There's trillions of dollars there. And what we know is this: crypto's not going away. People want to participate. They want to allocate. We are the responsible ones are looking for a little bit of guidance. I don't blame the banks for pushing back hard because they need to, maintain their ability to drive revenue and profits. But we're going to outserve and outpace them with velocity and products and do some things that others haven't with a lot of transparency. So if together we can continue to build trust and transparency in the marketplace, and then the trillions come in over time, it's not going to all come in the day after the Clarity Act is passed. But over time, I think trillions will participate and it'll become commonplace. And I'd love to get to a place where someday it's 4 to 8% asset allocation into crypto, and do your own due diligence, right?
It will come, my friends. I'm a believer. I'm an optimist. And I want to give a huge thank you to Kevin once again. We are going to be coming by the San Diego office, I think Friday or Saturday. So I'm really looking forward to that. And just a big thank you for you joining us today. We'd love to do it again, guys. Let's get a hashtag thank you, Kevin, in chat. And we are going to break down at the end of the episode. We're going to talk about the super cycle narrative, but he's an important guy. He's got things to do. We're going to sit here and chat on camera for a little bit longer. So again, thank you so much. And we look forward to seeing you this weekend if we can.
Thanks, guys. Yep.
See you
Have a great day. All right, guys. And so let me know in chat, what are your thoughts? Did you enjoy the conversation? And again, people said, how do we start? The easiest way to start here, click on the link below, take advantage of our GEC promo where you're going to get $100 free to sign up with our promo link. And that will not work against your principal here in the $7,000 for the Roth IRA or the $8,000 if you're above the age of 50. But Johnny, we had super cycle in the title. We are not going to disappoint because this video right here outlines exactly what we've been saying. Fidelity and many of the other largest companies on the planet are finally opening up to the idea that something different is happening this time. It's not a 4-year cycle.
Traditionally, what we have seen is Bitcoin has had this 4-year cycle.
Mhm.
And that 4-year cycle has been highly correlated to Bitcoin's halving events. So in 2016, if you go 10 years ago, in 2016, you had a halving 17 months after you had peak price of Bitcoin in December 2017 when it hit around 20,000. Similarly, in 2020, you had another halving event. And then 18 months after, in 2021, you had another peak price of Bitcoin.
Right.
So some might say that you had the last halving in April 2024. So maybe we are past that peak price. But again, on the other side, you're also seeing a lot of arguments around how we might have entered into a super cycle as opposed to what we have seen in the past of 4 years.
Yeah.
And what a super cycle really means is you might have more prolonged highs, longer highs, and shallower dips. And I want to give a shout out to Fidelity Digital Assets research team, which talks about the super cycle mechanism. And we might see something similar that we have seen in the commodities market in the 2000s. And that's dictated by 3 big factors. One is you're seeing this steady buy-in by institutions focused on ETPs. In the domestic market, especially in the US, you're seeing pro-crypto policies. And then the third, which I'm really excited to talk about, is we're also seeing how the crypto market as a whole is maturing and deviating from the S&P 500 and precious metals. So that's great.
So there you have it, Johnny. He basically, it's a similar thesis. It's not based on the ISM and the liquidity cycle, but he's saying all these different catalysts have changed the way that businesses and retail investors are interacting with the crypto space. What we saw over these last 12 months was everybody was waiting for that blow off top, and we just capitulated. We traded sideways between about $85,000 and $110,000 for the majority of that price action. We got a slight breakout up to 126. It was very short-lived. I think we are going into something different this time, and that's what I've been very transparent about on this channel. It's great to see some of the biggest companies on the planet acknowledging this fact. Crypto has changed. Now we're waiting on the price action to change as well. But what are your thoughts on that video?
And it's just so funny because I think everybody's relearning this whole thing. And the funny thing is, the thing I always questioned in my mind, but didn't question enough, was why does the money in the pump happen a year after the halving? If the cycles are driven by the halving, and the halving happens every 4 years, then why wouldn't the money happen then? And so I was like, what's going on there? And didn't understand that. But when you now think about, when you listen to Raul Paul talk about it, it makes more sense that it never was ever based on the halving, but it was based more on risk on asset money when it became available, which obviously was the reset of the cycle every 4 years. And it just so happened to be that it was so close to the halving of Bitcoin a year later then it just felt like, okay, Bitcoin halves, and a year later, it doubles. And it's like, no, what's really happening is Bitcoin halves and the liquidity cycle resets a year later. And so they were just following each other. And then what happened this year? Well, Rob Paul figured out it's really a 5-year cycle, not 4. And now if we actually see Bitcoin in this whole market go banana zone in this next, then we're going to know for sure, because that would be 2 years after that it was totally tied to the liquidity cycle and no other reason. And so that's what I'm looking for. And this guy brings up another whole point of other different catalysts, and it could all be drivers of what's bringing them. But at the end of the day, it's pretty simple. The more money available, the more money things are going to go up. And to me, I struggle thinking it's anything less or different than that. So that's kind of, when you ask me my opinion, that's kind of where I'm at still. I'm kind of, the jury's out for me, but I believe that is going to be the key. And then couple that with the Clarity Act that you just heard Kevin talk about. And he said, yeah, Johnny, there's what? Tens of trillions, or I don't know what it's T with the trillions of dollars sitting on the sideline that also want to come into this market. So imagine this. You got the debt recycling, there's a bunch of money coming in. And then you got a Clarity Act that says, oh, hey, even more money could come in. And to me, that's Johnny Krypto's definition of a super cycle. So I don't know what everybody else is saying, but that's my definition. That's what I believe will bring us to a super cycle, is having these two things happening around the same time. And that's why I'm very, very bullish for 2026. And if those things don't happen, I'm going to be very, very disappointed. But that's how I'm playing the game in 2026, my friend.
Well, you said it best during last night's episode, Johnny, where you said there's two situations, right? There's the liquidity cycle situation and there's the Clarity Act. If we get one and not the other, we're going to get an alt season most likely. If we get both, that's where the super cycle narrative really comes into effect. And we could see asset prices like a Cardano and XRP, many of these assets that are severely undervalued, have rapid price appreciation because of the liquidity cycle. And that's what we saw in 2021. A primary example of this, guys, was XRP was down at 17.5 cents after being sued by the SEC. Within 4 months, because of the new liquidity, we saw that asset do an 11x for no specific reason. That's the type of momentum that we're witnessing based on the liquidity cycle here in the crypto space. And that's why I'm excited about 2026. Here's our friend Dan Gambardello breaking down what he's seeing in Cardano and how this could apply to XRP. We're going to put that spin on it. Here it is.
Can happen because of all the stimulus that came into play. This has just been a very tough business cycle for markets in general, but crypto especially, because crypto, when we look back at these charts, it reacts to expansion in the business cycle. And so Cardano, ultra consolidated. So when you're looking at Chainlink, Cardano, Ethereum, the upside is so in play right now, and we are at such pre-bull market areas. And I just wanted to kind of share these parallels with you. And I wanted to try and do it as quick as possible, just over 10 minutes, but good enough. So let me know your thoughts in the comments below, everybody. If you're not a subscriber, please subscribe. And if you enjoyed this content, got any value from the data, please smash that like button. And if you're not in our intelligence system, get signed up with a free trial. Try it out. Because if Chainlink is at a 28 right now, imagine getting into this risk model December 2018.
Let me just share what he's saying, Johnny. The risk model is currently showing a 28 on Chainlink, which is the asset that he's chosen for this analogy. The last time this asset was at a 28, the value of Chainlink was 29 cents back in 2018. That is the type of opportunity that we're talking about today in the crypto space. And that's why I want our listeners and our community to double down on what you understand. Don't fall for the bear market narrative. Don't be scared out of something because you think it's going to drop 60% in a week. You all remember my story from last year. I have a great friend. He's 82 years old, been in the crypto space since 2019. He called me during the Trump tariff scare and said, I'm selling 100% of my assets. And I said, don't do it. Just wait. And he's like, I know I'm right. Sold 100% of his assets. You know what happened? Quick dump. He thought he was correct. He was going to be able to buy lower, and then they left him in the dust, and asset prices rose, XRP rose, and he was buying those same assets 40, 50 cents higher in price. So that's why our listeners need to take the long-term approach of dollar cost averaging and not thinking you're going to catch something right before it takes off or you're going to sell something right before it dumps. That's how you set yourself up for failure, and I want our listeners to avoid that mistake. But Johnny, what are some of your thoughts on this one?
I could not agree with you more. That's why you got to have, man, that's like a broken record. You got to have a profit plan. I never try to time the market. That's a mistake. You got to have a profit plan. We created Merlin. We're giving you the tools, guys. We're giving you the two tools you need. You need to have Merlin so you can create your profit plan, bring all your coins in one place, see everything happening together, set your alerts. You're going to get those sell targets. And when they do, then what's the next thing you do? Then you go into your Roth ITrust IRA account, or I do, and I go in and I sell in there. And the reason why I love selling. People are like, Johnny, why are you selling? Why would I want to sell? I'm taking profits in a tax-free vehicle, right? The Roth IRA and the ITrust Capital allows me to be able to do that. So for me, I absolutely love it. I don't try to time the market. Oh, I'm gonna sell everything now and buy back later. That's the biggest mistake you can make, because exactly for what you just described. If you sell and it don't keep going down, you're gonna miss out. That just makes no sense to me, especially in a market, Abs, that is in its infancy. We're not talking about a market that, like Kevin talked about, there's tens of $1 trillion coming. Those trillions aren't here already. If those trillions were here in this market, that's a different story. But we're talking about a market that at any moment in time, that money could come flooding in. I don't want to get caught with my pants down. I want to be out of this market. And all of a sudden, the clearly that happens, this happens, bang, bang, boom, and money's flying in everywhere. And we know how fast the crypto market can move. To me, that's not worth the risk. So for me, guys, click on the links below. Go sign up for your 30-day free trial of Merlin. Get your mug too if you want. And then go get an iTrust account. You get $100 free if you use our link below. That does not count against your limit of the current year. So you can get a little extra money into your account. And as you heard Kevin say, they're specialized. They'll call you. They'll walk you through. They'll hold your hand to get your account set up, guys. So if you want to be like me and Abs and set yourself up in a position for the future where you're going to be taking profits during the speculative run and taking them where they're tax-free, you got to sign up, click on the link below, and get an iTrust account. I don't know what else to tell you, Abs. We told them the secret of what we're doing. At this point, the action is in your guys' hands.
Well, I thought it was really great how Kevin highlighted the Clarity Act, from his perception, is going to be passed inside the United States, and that's going to lead us to the moment that we've been waiting for. Now, the title of today's episode was the SEC just confirmed all U.S. markets will be on-chain in the next 2 years. That is a correct headline, and we are already at, I'm just going to give you the live like counter, guys. We're rocking and rolling already 55 minutes into the program. We got 668 likes on the show. Can we pass 700? That is the goal for today. I think we can get it done, guys. 32 more likes, but we're going to close it out with this video right here. This is the SEC chairman stating all U.S. market will be on-chain in the next 2 years. You decide what that's going to do to prices.
Tokenization is the idea of using then smart contracts or tokens on chain to be able to that represent, say, an underlying security. So then that tokenized security is a security and would be subject to SEC rules by law. But the idea is that if it's on chain, on a blockchain, then there's much more transparency as to where it is. Right now, there's a bit of opacity as to who owns what and where the company usually doesn't even know where its who its shareholders are and where the shareholders reside, where the shares reside. So tokenization has the benefit of potentially having, instead of T+1 now, trade date +1 for clearance and settlement, the prospect of maybe T0. Now, depending on the instrument, and we have to think about netting and all sorts of other things with respect to some instruments. But in principle, the idea of on-chain delivery versus payment and receipt versus payment, DVP, RVP on-chain, is a prospect of de-risking the markets, making them much more transparent and then sure as far as clearance and settlement, because it's always that the gap between clearance and settlement and then delivery and payment is the real introduces risk into the system.
Do you expect this is where financial services is going? Are the major banks and the brokers out there today moving increasingly toward tokenization?
Oh, absolutely. And it's the way the world will be, here in the, maybe not even in 10 years, maybe even a lot less time, maybe a couple of years from now. So I think that all of this modernization of the markets, I think, is good. And the trouble that we've seen here over the past few years is that the SEC, unlike historically, it never was necessarily at the vanguard of pushing new innovations. It was always a little bit behind the market, of course. But here recently, it's been almost standing athwart the marketplace. And
So you heard it there. The war on crypto is over. Paul Atkins is going to make sure of that. And I wanted to remind you guys, tomorrow, we are going to be having Canary Capital CEO joining the show. The largest XRP ETF issuer today is this man right here from Canary Capital, and he's going to be showing up to talk about it here on the Good Evening Crypto channel. We did already pass 700 likes. Shout out to you guys. Forget about me. Forget about Johnny. You guys are the best community in all of crypto, and I say that both on and off camera. Here's one last clip. This is the CEO of Canary Capital talking about what Clarity Act means for XRP. We're going to have some different opinions tomorrow. It's going to be a great show, but here it is.
Does XRP even need the Clarity Act? This, of course, came in from a senior exec over at Ripple saying it's after clear regulatory status. It's not really clear. Well, it is clear, I think, to everybody in the market that XRP doesn't really stand much to gain other than the fact that the rest of the market might continue to fly. So if Clarity gets stuck in the weeds, does this even hurt XRP? What's your take?
Look, I don't think the Clarity Act has any bearing on XRP either, the way that we look at it. We look at it as a commodity. We look at XRP Ledger as financial rails that are sort of independent from, any type of security rules, same as Swift or something like that. So I don't think that this affects them at all. But there are some companies that would likely affect. But yeah, I don't think it has any bearing on things like XRP, HBAR, Bitcoin. Is just simply not affected by it.
Well, here's why I do think it will be affected, Johnny, because I think for the time being, this market moves in tandem, right? Everything kind of moves together. You see Bitcoin up 12%. You can check the altcoins. They're going to be up 12, 15, 20% as well. And so the Clarity Act, to me, it's a very simple and obvious analysis. This is going to bring more money into the space. That's going to move some of the largest assets like Bitcoin, ETH, and XRP. And we're going to benefit from that. And if it doesn't occur, then those trillions of dollars, like Kevin had referenced, they're going to stay on the sidelines for the time being. But we are in overtime, guys. We did just pass the 1 hour mark here on Good Evening Crypto. Again, tomorrow we will be having Canary Capital CEO live 11 a.m. Eastern. So be sure to turn your post notifications on so you do not miss that episode. If you have a question, throw it in chat. We're going to be breaking it down. And here's the interesting part, Johnny. Canary Capital, the entire company, was worth $200 million. They launched their XRP ETF. That ETF alone worth $250 million. So this guy, he knows what he's doing. He's excited about XRP as well. It's going to be a great conversation. But what are your thoughts on this?
Well, we're excited too, Abs, to have him on. I can't wait to have him on and chat with him as well, because like you said, they are a big player in the space now, or at least, in terms of bringing in ETFs, they were very excited about it in the first round of there. So good for them. We'll talk about that. The other thing I'm excited about, Abs, I don't know if we told the audience, but you and I are going to be out in San Diego meeting with ITrust and doing some other things, and we'll be doing some other special things out there. So guys, if you want to catch behind the scenes of Johnny and Abs as we're kind of traveling the world and doing things, make sure you click on the link below, sign up to become a member. All members will be able to get access to, we share kind of like what we do, videos and stuff like that behind the scenes that we don't share publicly. So if that's stuff you care about or interested, click on the link below, join and become a membership. We appreciate it. It helps grow the channel. But Abs, one of the things to wrap up the show today, I thought Kevin was a great guest. I do want to answer a couple things that people did kind of mention just to wrap. So first of all, don't worry, you'll never catch me with my pants down. Although maybe if we do another cold plunge, that could be. But this is something that I want to answer. So this is
quick question: why would you have your pants off for the cold plunge? That's my question for you.
Well, I think you're drawing. You missed the point of the whole thing. Right? I'm not going to have I'll have my bathing suit on, which is as close as you're ever going to see me as pants down. That's my point. But I do want to answer this because this is important. So somebody said here, ITrust does not allow transfer of your holdings. You would need to cash in and then cash out, I think he means, and then buy back in with your cold wall or another exchange. Beware of this. Nobody talks about this with ITrust. That's not true. We do talk about it. There's two ways to get into ITrust. If you're moving into a retirement account, this is correct. You are going to have to sell what you have and rebuy, or you can do like I do. Don't sell your current stuff. Just start a new account and start DCAing into that new account in your Roth trust. All right, so that's one option. Option two, if you're rolling into a PCA account, Abs, you actually can roll your assets into them for the ones that they have about, I think, 10 assets that are rollable where you would not have to sell. So again, You click the link below, you sign up for an account, you call them up, and you ask them, hey, which assets can I roll over, which ones can I not, and so on and so forth. So I just wanted to kind of set the record straight on that because I think it's important for people to understand it. And the other thing, guys, you used to need a promo code when you signed up to get the $100, but the good news, Abs, nowadays, you don't. Just click the link below, it automatically tracks it for you, and you will automatically get that $100 bonus. So with that said, Abs, I'm excited for this weekend. I'm looking forward to hanging out with you in person again. It's been a while. I'm looking forward to it as we move into 2026. I think it's going to be a great year. That's where I'm at right now. I think there's so many positive catalysts as we keep hearing about right now. The Clarity Act. You just heard the video you just played from Paul Atkins, literally telling you, Abs, he's literally telling the world, guys, the whole world wants to tokenize. It's coming, and it's going to happen on blockchains. And that means then these cryptos associated with these blockchains, we believe will appreciate over time. What will the appreciation be? I don't know. But here's what I do believe. There's going to be a speculation that they're going to appreciate. And in the speculative phase, that's what you want to happen so that money can go up.
Guys, always do your own research. We're just two guys talking about crypto on the internet. We are not financial advisors. None of this is financial advice. But the reason I often talk about ITrust and Merlin is because I use those products. So people say, why are you leveraging ITrust? Well, I think we explained it very well during today's episode. Why are you using Merlin? That way I can take a little bit of profit when these asset prices are higher. Now, if I had to pick, I would say ITrust, right? I love the Merlin application, but one of the things is that anybody can create these arbitrary goals on their own. If you want to take it to the next level and do what institutions are doing, which means creating your profit plan and executing on that before you even buy the asset, that's where you can take advantage of Merlin and use these things. But we did get some donations, guys. I did want to give a big thank you. Anybody who enjoyed the show today, shout out to you guys. Today was obviously an interview format. I'm always going to be respectful of the interviewee. We're going to let them speak and talk as much as they'd like. So we appreciate your patience during today's episode as well. But GCB with the $4.99 said, hey, Abs, wouldn't the government want as many stablecoin issuers as possible to buy up treasury bills? Not allowing them to offer yield will reduce this incentive. Well, only if you think the banks aren't going to be launching their own stablecoins, because banks could launch their own stablecoins and be purchasing treasury bills on their own. They don't need a third party in order to do so. That would be my response to that. Big thank you for the $4.99. Hopefully that's what you were looking for. Crypto Kelly just became a brand new member. Massive thank you and shout out to you and all of our members. We're up to 286 members, maybe 87 after this episode. Lucas Hawkins with the $1.99 and the membership said, Keith D is having Abs on live. Don't miss it. I'll be there. Shout out to Keith D. I love that channel. Everybody should go check him out. He does these awesome videos where he records himself walking and talking about crypto. He's huge. I think he's only getting bigger. So I'm looking forward to collaborating with him. I think it's going to be awesome. Crypto Geek with the $5 and the membership said, am I okay with my Ledger wallet? I don't share anything with anyone. Private keys are extremely secure. Holding XRP 5 years to eventually earn income. Here's what I can say. I don't work for Ledger, got no sponsorship, nothing along those lines. I leverage the Ledger Nano device. I love the product, and all I know, I've never had an issue with it. So my answer would be yes. I appreciate and really enjoy using the Ledger device. I think it's a secure device. And this person, Tim Cranston, 7296, shout out to you, another member of the Good Evening Crypto community, guys. But we're going to wrap it up for today. Hopefully you guys had some fun. You learned a little bit. We're going to be back live 11 a.m. tomorrow with Canary Capital CEO talking about XRP, ETFs, and so much more. Whatever else comes up during that chat. But we love you guys. We appreciate you all. Go out, touch some grass, hug some family, and a big thank you. We passed 780 likes for today's episode. Like always, you guys are the best in the business. So we love you all. We appreciate you all. And we'll see you in the next.
Going to be so proud of your president, and I don't care about that. But you are going to be so proud of your country because we're going to turn it around and we're going to start winning again. We're going to win so much. We're going to win at every level. We're going to win economically. We're going to win with the economy. We're going to win with military. We're going to win with healthcare and for our veterans. We're going to win with every single facet. We're going to win so much, you may even get tired of winning. And you'll say, please, please, it's too much winning. We can't take it anymore. Mr. President, it's too much. And I'll say, no, it isn't. We have to keep winning. We have to win more. See, the bottom line is, well, you don't know much about crypto. You know nothing about nothing. You fake news.
So if you're looking to do the same strategies that we implement here on Good Evening Crypto, I would advise everybody sign up for Merlin and click on the ITrust Capital link below. Now, why did these two ideas play off one another? Merlin is going to allow our listeners to understand where they should be taking profit in this market. And ITrust is going to allow our listeners to take that profit tax-free through an IRA product. Now, that's not the best part about this. We are giving new clients a $100 sign-up bonus using the promo code GEC9. So I would encourage everybody, click on the link below the video, use promo code GEC9, and set yourself up for success during this crypto bull market.
But the challenge, as you know well, is the U.S. has had this very hostile, the Biden administration